Welcome back, and you're watching Market Fatafat on ET now. Let's keep it going with the stocks that have been buzzing in trade, and we do have MOL that's buzzing away in trade. Now, this PSU, obviously PSUs are seeing a rally, but other than that, there's a reason for MOL buzzing in trade is that now the company has actually hiked the price for ferro grades manganese ore, and the new rates will be applicable from the 1st of June. So yes, from today we're going to see those new rates which will be applicable for MOL, and that is why the stock is trading at high. It was trading at today's highest level, which was around 548, around those levels. Today it's given up those gains, but still managing to hold on to gains of 5% right now. And keep an eye out on that. The ferro grades with manganese ore content of Mn 44% and above have seen almost a 35% hike, and that is the reason that we are seeing the stock buzzing away in trade today.
All right, let's talk about Aurobindo Pharma then, and why is this particular counter in focus today, Ansh?
The stock is trading 3% in gain today. Company is focusing on contract manufacturing operation for biological to boost its business prospect. It has formed a joint venture with Thernheim Biologic Private Limited, a subsidiary, and Merck Sharpe and Dome Singapore, which is also known as MSD. This partnership aims to expand its biologics manufacturing in Medak district and enter the CMO market for biological both domestically and internationally. Thernheim will build the manufacturing facility, produce the product and supply them to MSD, investing around 1,000 crore in the new facility. We have a brokerage note through Macquarie as well, and they have maintained outperformance rating, and they have also raised the target price by 7% to 1,385 from 1,300, as they believe that the actual revenue from the contract would start flowing from calendar year 2027.
All right, let's shift focus then to the real estate pack, which Snehi actually tracks very closely, isn't it, Snehi? So, Purvankara, why is this one in focus today?
Well, absolutely, Cheryl. So, Purvankara is in focus on the back of a land acquisition that the company has made via its wholly owned subsidiary, which is Purva Oak Private Limited. Now, this wholly owned subsidiary has acquired 12.75 acres of land on Ghodbandar Road, which is in Thane, and the land has an estimated potential carpet area of 18.2 lakh square feet, and the potential gross development value, which is the GDV, or what this land can yield over the course of the project, is estimated to be a staggering 4,000 crore rupees. So on the back of this positive news flow of this land acquisition and the yield that the company is expecting of it at 4,000 crore rupees, the stock is up almost 2.5% as we speak.
Okay, surely keeping an eye out on Purvankara. Let's move on and bring on board Sameet Chavan as well. Sameet, very good afternoon. Thank you so much for joining in with us on Market Fatafat. And the first stock that you've picked out for us is Bank of Baroda. On the charts, how is it looking, and what is the level that you should keep an eye out on?
Good afternoon. Needless to say, we have been seeing, a massive outperformance from the entire PSU banking space, whether it's SBI, Canara Bank, Bank of Baroda, or some of the, mid or small size names. So as far as Bank of Baroda is concerned, in last couple of months, the stock consolidated in a, slightly wider range, 285 on the higher side, 250, 260 on the lower side. This range has been, broken in the upward direction and with gigantic volume. So, considering the overall momentum, the upward trajectory that the entire PSU banking space has been enjoying since last 1.5 years, we expect further upside from current levels. So, with a short-term view, 312, 380, these are the levels to watch out for. But if you have to take slightly broader view, then probably 340, 350 seems very much on cards. Now, as far as support is concerned, previous breakout point, the resistance levels around 280, 85 would act as a very strong.
All right, let's shift focus then. Let's talk about a stock that is blinking red in trade today, and that is Godfrey Phillips, one of those rare counters that is declining in trade today. Last time I checked, the stock was trading lower by about 2.6%. That's the level that is holding on to. The reason why the stock is under pressure, and this is from PTI, the news report stated that the executive director Sameer Modi lodged complaint with the Delhi police against his mother Beena Modi, her personal security officer, and the company's directors over assault. Godfrey Phillips, this sort of an assault came in during an event of Godfrey Phillips, but on back of that, I believe the stock is under pressure in trade today. It's trading lower by about 2.7% as we speak.
Let's move on then and talk about the next stock on the technicals, and that is Gail. Sameet, this one has seen a sharp run up in the last 1 year, specifically from 100 levels, today trading at 227, so almost doubling there. What is the outlook now for Gail? Should we still expect this run up to continue?
See, the entire PSU basket is on roll, and not now. It's been nearly 1.5 years now. There has been a relentless rally that we have been witnessing in all the pockets within the PSU space. So as far as Gail is concerned, similar pattern to what Bank of Baroda has seen in the recent past. This particular stock consolidated in the range of 110, 190. This consolidation phase seems to have over now, since the stock has broken out with an upward gap with sizable volume. So with the kind of intensity that we are witnessing today, it seems that the stock is poised for a move towards 240, 245 in probably a couple of weeks time. So overall, obviously the buyers remains positive. 210, 212 should act as a very strong support, and any decline probably in next couple of days would be a good kind of opportunity for me.
Let's talk about Shriram Finance then. That particular counter is soaring in trade today, 7% up move last time I checked, because this raised about $425 million and 40 million euro through a syndicated social term loan. This is what the company informed the exchanges today. The company said that they've received a strong demand from marquee Indian clients in the global loan market. Initially, the company had planned to borrow about $200 million through this multi-currency equivalent with a green shoe option. However, as the deal received better response, the group expanded it to 16 lenders, including banks from continents spanning across Europe, US, as well as Asia and Africa. And you had BNP Paribas, DBS Bank, HSBC, Sumitomo Mitsui Banking Corporation among the lead managers and book runners and social loan coordinators for the facility of this deal. So the company said that this marks the largest syndicated multi-currency transaction by a private sector non-banking finance company. And on back of this particular development, you can see the stocks are still trading higher to approximately 7%.
Absolutely, but let's move on and talk about PFC then. And Sameet, one more PSU name coming in for your list. Similar, what you're expecting in terms of an up move like Gail?
So in fact, this has been one of the outperforming stocks within the PSU's bank in last 6 to in fact in PSU space in last 6 to 8 odd months. Both twins PFC, REC, they have been performing exceedingly well. There has been no stopping for their massive bull run. So as far as levels are concerned, since it is trading in an uncharted territory, it would be very difficult to project immediate levels. But considering the overall momentum, 565, 570 clearly on the cards. But at higher levels, around if the stock reaches 570, 590 kind of zone, we might see some short-term profit booking in this particular counter. But as of now, the momentum is quite strong. This might take this particular stock to 575.
Alright, let's shift focus then, and in a significant move, you have Amul and Mother Dairy. Both have increased the prices of milk by about 2 rupees per litre, which is effective from today across the nation. According to the Gujarat Cooperative Milk Marketing Federation, which markets its dairy products under the brand name Amul, they said that the milk prices have been increased due to an overall hike in the cost of operation and production. Remember, to recall, the last time Amul raised its milk prices was back in February 2023. Meanwhile, you also have Mother Dairy that has flagged the rise in production costs that have been affecting the industry for over a year as the main reason for the price hike. My colleague Nikhil is standing by for more details on that. And Nikhil, yes, a price hike finally coming in for the dairy sector.
Amul has announced the hike in the prices of milk by rupees 2 a litre. This comes in effect starting from today. That means starting from Monday, 3rd of June, the Amul prices for the milk, it is going to get costlier, and this comes in effect after the completion of the 7 phases of the Lok Sabha elections. And similar setups, that means Mother Dairy and other similar which offers the milk variety, they are also expected to fall in line. When exactly they are going to announce their hike in the prices, this is something for the days to reflect. Currently we are reporting from outside one of the Amul milk parlor, and this is something which is being faced by all the end consumers. The consumers are the ones who are going to face the brunt. And if we talk about the percentage in number, the hike of rupees 2 reflects to about 3 to 4% hike in the overall MRP as far as the per liter is considered from the side of the Amul. But Amul has come out in the public domain saying that there is already an increase in the cost of production and the cost of operation as well. Therefore, it was necessary to increase the prices by rupees 2 a liter. And also they have said that in the last year they have given out the compensation to the farmers by 6 to 8%. This is the reason why they had to increase the prices of the milk by rupees 2 a liter. But the end brunt is going to be faced by the consumers who are going to purchase, and this is one such commodity which is used on a daily basis by all the consumers across the country.
Okay, thank you so much for that update on the milk prices there, Nikhil. But with that, we're going to slip into a very short break. Don't go anywhere, because after the break, we'll be back with more of the stocks that are buzzing in trade.
Welcome back. You're watching Market Fatafat right here on ET now. A lot of stocks buzzing in trade today, participating in the rally. Now you have Reliance Industries that's trading upwards of about 5% in trade today. But not just Reliance Industries, you have other counters also that are buzzing in trade. So Bajaj Auto, Sameet, how is this one looking on the charts to you? If you look at the line graph of Bajaj Auto, it has been actually performing well over the last few months. What's the near-term target that you are actually penciling for this one?
See, if you see, the entire auto space has been doing well since last couple of years. In fact, this is one of the spaces which started this bull run in the initial phase. So as far as Bajaj Auto is concerned, within the two-wheeler space, clearly this has been the outperforming stock, and it is now trading at all-time high. There has been a vertical rally that we have seen in this counter over the past 15 to 18 odd months, and there has been no stopping. So after a pause, after a brief pause, this stock has again resumed its upward trajectory. So as far as levels are concerned, 9600, 9800, these are the levels to watch out for. If the stock manages to surpass 9400 today itself, we can see, we can get a confirmation of a breakout from its daily chart, and from here on, the next levels to watch out for, as I said, the 9600 to 9800. On the low side, the base has been shifted higher from 8600, 8700. It has shifted towards 9,000.
Okay, keep an eye out on Bajaj Auto over there. But let's move on, talk about Inox Wind. Why are we keeping an eye out on this one? Now, Inox Wind Energy Limited, which is the promoter of Inox Wind, has successfully raised 900 crore rupees. And this is through sale of equity shares of Inox Wind via block deal on the stock exchange. This had happened last week, but we're still keeping an eye out on this one. So yes, amount was raised by the promoter company, and that was through selling Inox Wind shares. Today, the stock is managing to hold on to gains of 3%.
All right, so that is Inox Wind in trade today, but let's put the focus on MedPlus, because this particular counter is also under pressure in trade today. Is one of those other rare counters that is actually declining in trade today, and this because one of the key reasons being that they have their unit has got a 4-day suspension order of license or operations for a store in Telangana, and that's the reason why you can see the stock under pressure in trade today. It is down about 1.8% as we speak.
Okay, surely keeping an eye out on MedPlus, one of the stocks that has very few stocks that have been seeing a decline in trade. Let's move on and talk about IOC on the charts then. And Sameet, when you're looking at IOC, where do you see the stock price headed in the next few months? What is the target price that you're keeping? Today it's surely buzzing in trade. Last 6 months also 51% return. What is the outlook?
See, among the OMC's name, if you see BPCL, HPCL, they have already given stellar move. IOC, which have underperformed a bit, but from here on, we are likely to see some catch-up move in IOC as well. Stock has spent nearly 3 to 4 months around its important level. The base seems to have formed around its 89 days exponential moving average, and the kind of price activity, the price structure that we are witnessing on daily chart, it seems that the stock is likely to give decent move probably next couple of months time. So as far as the short-term view is concerned, we expect the stock heading towards a 190, 195 kind of zone. We might see some challenge around 195, but once the stocks are passes this important hurdle of 195, 200, we could see this stock probably heading toward 225, even toward 230 in next 2-3 months.
So that's all about IOC. Let's talk about the auto pack as a whole, Snehi. While we were all tracking exit polls, you had silently all the auto companies also report their auto sales of the month gone by. How are the numbers? What sort of a trend can you make out of them?
So mixed bag coming in this time around actually, and we do have a report card here of how the auto companies have done. M&M Tractor and Eicher VECV have actually beat what the street was expecting, and on the back of that, M&M is holding up very smartly right now, 5.4% higher. But on the flip side, Eicher is not doing that well and is down 1% in the trading session where most stocks are in the green. But this also comes on the back for Eicher that their motors, their PV division actually has come in below estimates. So that is what is weighing on Eicher actually. And Maruti and Hero Moto are also, below street estimates. The numbers have been below. So those stocks are in the green but not doing much. Other than that, M&M Auto PV, you have Tata Motors CV and PV, Ashok Leyland, TVS Motors as well as Escorts. Good set of numbers coming in an inline set. So nothing much that's disappointing over there. M&M and Ashok Leyland holding up pretty smartly. Both are over 5% as we speak. And PV sales overall, when you ask for trend, PV sales have held steady. Maruti Suzuki has reduced 5,000 rupees for the auto gear shift variant of select models. So that is something that could weigh on the stock going ahead. Eicher Motors and Hero Motor sales have been below estimates. CV sales this time around have been as per estimates. And M&M is the one that has clocked in positive sales over there as well. And CV sales on a year-on-year and month-on-month basis have also been positive. And lastly, tractor companies are also hoping for improved sales data ahead. So largely that's the roundup on your auto sales data. But well, yes, Mahindra and Ashok Leyland are the two stocks that are shining because of this data.
Let's move on to the next stock. And Anshu picked out NMDC for us today. What is the reason for NMDC being in focus?
Right, so the company has come up with their production and sales of iron ore for the month of May, and here we are seeing that May sales have been reported at 2.8 million tons compared to 3.6 million tons, which is down by around 22%. We are seeing a decline in production as well by 36% from 3.7 to 2.34. Also, if we see on chart, actually despite reporting a decline in production and sales, the stock is up 3% in trade today. It has also snapped its 5-session losing streak and it has surpassed above its 20 DMA to touch a record high level today.
All right, let's talk about Nestle then. And Sameet, how is Nestle looking to you on the charts right now?
See, this stock is clearly sulking, despite the fact the entire broader market is elated. As far as Nestle is concerned, the stock has been continuously declining since last couple of months at least. In this process, it has broken down from its all important support levels, key moving averages. So as far as Nestle is concerned, in the near term, we are like to see lower levels, probably 2200, 2100 in next 2 to 3 weeks. So any up move from current level would be an exit opportunity in case of Nestle.
Okay, that is the view on Nestle India, but that was the last stock for today. So thank you so much, Sameet, Snehi, as well as Ansh for joining in with us on Market Fatafat today. But let's move on and shift focus with the election triggers out of the way. Should investors look at newer areas? What are the market onshores looking at as return havens? Heard out the opinions from market veterans like Paranju Vilyat, Sandeep Tandon, as well as Nilesh Shah and Manish Dange.
Oil and gas sector in PSUs, it looks very attractive, and it is most of them are trading at single digit P's, and of course there are a lot of uncertainty. People even fear about political policy. The decisions could be against these companies because of managing subsidies or whatever. But I feel the dividend yield of these companies from 5 to 10%. And their earnings are going to be better, if not same.
EMI space, which is energy manufacturing and infrastructure, will remain the bedrock of the pillar of this bull market. That will continue to be the big area. The second essentially is basically the long-term compounders witnessing linear growth, areas in like financials or the premium consumer side. I think these are some really attractive opportunities which will be there.
Infra as a theme, manufacturing as a theme, PSU as a theme will continue. I think railway could be a very important thing, which they have talked about. Energy could be a very important thing. So far, we have seen power. I think the continuity of that space will continue. Anything related to storage aspect on the energy we were talking about, and maybe a lot of speculation is going on. The taxation related changes coming, the GST will be part of these things. So I'd like to wait and watch. But these are the areas I think where under ownership is very meaningful.
They will return to their favorite sectors and favorite caps, which is why mega caps will do rather well. And within that, private sector banks, it's sort of easy to dial that risk because it at least on the face of it appear relatively cheaper vis-a-vis other constituents of Nifty or big market. So I guess this is where a little bit of a perk up can happen, where FIs who are short, actually burn their positions and sort of unwind their short positions. Return of Modi actually is absolutely loved by bonds, because it sort of assures that this small risk of high fiscal deficit and potentially very high inflation has gone. Modi regime's policy have ensured that even in a growth such as what we are experiencing right now, core inflation is below 4%. So you would see more of it over the next few years. That means a sort of legitimately a secular and rather very big bull market can happen in bond markets over the next 3, 4, 5 years.
Short-term players will indulge in profit booking. I mean, as they say that buy on rumor, sell on news. So today is essentially the day when the markets are reflecting the exit polls. Tomorrow is 24 hours from now. We will essentially have visible trends in terms of which way the verdict is flowing. I don't think anybody has doubts about which way this verdict is going. But it's very likely that you might see some profit booking happen because that's essentially the kind of nature of business in which short-term players are in. But long-term players, I still think they will continue to kind of come in. And clearly, when you take a 3 to 5 year perspective, markets essentially are not expensive. Markets are reasonable. There will be pockets of where valuations are way more attractive. And that's where money will flow in.
It's going to be a very interesting time ahead. There will be a lot of volatility. At the same time, for the long-term investors, see the long-term trajectory for India's economy and Indian stock market. It's very clear. It is very bullish. Equity will continue to be the best asset class. Indian equities, if you see any asset class in the whole world, not only in India. So that way, there is going to be, more and more fancy for Indian stocks. I expect more and more FIA inflow into the market in the coming years.
And with that, we are totally out of time on this edition of Market Fatafat. It's a goodbye from Vinny, myself, and the team that put the show together. But stay tuned. Closing trades coming up next with Anisha and Aisha.
If you like this video, then like, share and subscribe to ET Now.